Okay, for this next video lesson number 2, we're going to be looking at this trade here, which is not only actually an exit, but because the price action is so steep, we're going to be looking to do a counter trend as well as the trade after this. There'll be a trade at the next SDMB. So for this particular video, we'll be focusing on drill down at this trade, which you can see as the price is rising, and you can see that the ADX is smoothly rising. There's no fallback. Of course, we're looking at the 60-minute, so we'll want to look at some of the drill downs or visually track those 10 and 5 minutes as we're going up. For example, as we're making our way to some of these. So as soon as there's some color change, like first decreasing momentum bar, the first instance of that, we should be looking at the ABCs on all of these. And the long trend is, the long wave rather, the C wave is long at this first decreasing momentum bar. Meaning, and even at the second one too, meaning we're going to go ahead and skip that trade. And you can tell because there's a lot of, it's all unicolor TTMs, all blue. So in that case, we skip this for the exit and we keep going. And again, you can still see the ADX 1 hour, albeit 1 hour, is still rising smoothly. So what are we going to look for? How will we know when to exit? Obviously, we can't just wait till we see the first red bar here, and we don't want to just take the first, the next second decreasing momentum bar. Although it does show signs up here of starting to change, but we want to be able to get in as early as possible. So somewhere a little bit more exact than that. Well, we know some general points. We can obviously see the crossing here. We can see that, of course, like as I noted, the second decreasing momentum bar here. We can see the MACD hooking, which is a nice precursor to the actual entry point, which is often between that MACD hook and the MACD crossing. So what we can do is we can start to drill down after the MACD hook. So what does that mean? Well, for our drill down, we're going to be looking at the 10-minute and 5-minute ABCs. We want to see when they flip. Okay, so we can see that there's actually a big trend, ABC or BC trend, happening for hours, and that's significant. So one way we do these trades, whether it's an entry or exit, whatever, is we often look at the drill downs either the B out, which would be 3 dots after the last B dot. So we could enter here, or traditionally we would wait till here, but of course the newer style would be more like a few dots after the B is out. But better yet, better than the 10-minute, we can go to the 5-minute and look for a B flip there, if there's been a trend as well. And in fact, we see that that's the case. Look at this long ABC trend, and then A drops off, but the BC is still there, and then the B drops, but the C is still there. It's been there for a long time. So what do we look for? We look for a B flip in those cases. Now in this case, there's not really 3 dots between, since it's the one and the same. Our B out is equivalent to the B flip. So this is in fact our entry point. And we can see right here, and we can see that that's about 12:54 at approximately 10 a.m. So we can see that, of course, price is starting to fall, et cetera, et cetera. But more importantly, we can see that it's on the 60-minute chart, that it's before even the first decreasing momentum bar. That is the actual swing high zone, if you will. So that would be our exit, 12:54. interestingly, in this case, the 10-minute B out is actually before that. Okay, it actually comes a little earlier. Excuse me, cancel that. Cancel that. Okay, so that's basically the end of that lesson.